Matthew, welcome. Thank you so much for joining us today.
Thank you very much for having me.
Yeah. Really excited here to close things out with you. And maybe we've got a lot of ground to cover in only about 20 minutes. So before we get into it, though, could you just give a really quick 30-second introduction to yourself and the work that you do at Goldman?
Yeah, sure. So I've been at Goldman now, this is my 20th year, believe it or not. You wouldn't have thought that? Yep, exactly. And I've been running the digital asset business for the last kind of 5.5 years, which, as you can imagine, has had a lot of highs and lows, but feel like we're in one of the highs at the moment, which is great.
I was going to say, very few gray hairs for 20 years and 5 years of digital assets. Doing
it's not died, I hasten to add as well. Yeah.
Okay, can we just start out? I want to end with where you see this market going and sort of the state of institutionalization, et cetera. But could you actually just maybe use as a jumping off point, what's going on the Goldman front these days? I know there's a platform on the tokenization front that I want to talk to you about, but just give us the high-level state of the union.
Yeah, and some of you may have kind of heard this before, but I mean, we kind of really have digital assets dissected into kind of 4 core areas. One is the crypto part of the business. So we try to be as active as we can in every product that we're able to trade. And obviously with the movement in the US kind of legal and regulatory kind of space, hopefully that's going to broaden, but we're kind of all cash settled products. And as we see the market become more kind of institutionalized, there's just more demand for kind of different products. So you got the kind of crypto trading, which is a global endeavor, big focus on data and content as well in that part of the business. We also have the tokenization kind of part of the business, obviously another kind of topic du jour. So they're a big focus on kind of different tokenization initiatives. We developed, as I think many of you know, our own digital asset platform, which we're still very kind of focused on divesting that kind of next year, middle of next year is still the plan. And then there's also kind of the use of distributed ledger technology for kind of collateral mobility. And as we start to see with kind of more use cases for kind of stable coins and tokenized money market funds and other things and 24/7 markets, collateral mobility is just going to become ever more kind of key. So that's kind of that part of the business. Then there's kind of the classic banking part of the business, which really kind of manifests itself in 2 ways. One, we've made a number of investments, strategic investments, which again is a little bit of a microcosm of the market because you've seen a lot of kind of M&A activity even amongst our portfolio. And, kind of naturally kind of folks have aspirations to go public. Some have announced that publicly. And then we work very closely with our kind of banking team who, the market is just kind of night and day over the last 12 months in terms of, kind of traditional M&A and capital market activity. So we're very involved there, just given our presence in the ecosystem over the last kind of 5+ years. And then finally, digital money, big focus, kind of many threads to that, but stable coins, obviously, again, big focus, as we all know. And also, we've invested in a company called Finality, so also looking, quite closely to kind of central bank digital money too.
Can we take that maybe in reverse order and ask about, the money side of things? And, we had Nigel Farage come here today to talk about maybe some opposition to central bank digital currency and digital IDs. And I'm just curious, maybe on in the UK market specifically, do you see something like a central bank digital currency taking off versus stable coins? Do you see them being complementary? How do you view that?
Yeah, no, look, it's a good question. I would say a lot depends how you define central bank digital currencies, and I think Nigel's probably kind of thinking perhaps more along the lines of the retail central bank digital currency, not wanting to put kind of words into his mouth. I guess where we're kind of more focused is on a wholesale solution, and I think Finality's, is really focused on that. They're already live with the Bank of England, so it's something that, is there. And I think given where they sit, when you think about kind of money, they're the M0 layer, so they're that central bank settlement layer. Stable coins will be just very complementary. They're kind of M1. And so, for us, I think the two can coexist. Stablecoins, obviously, probably more accelerated, are going to have more market presence. But I do think you get ubiquity, scale, and a slightly different risk profile with central bank money.
And can you just articulate the difference between a wholesale versus a retail approach to CBDCs?
Yeah, well, retail, by definition, is something that's designed for retail.
Yep.
And I guess, the theory there is that you can have kind of great oversight in terms of how they spend, what they spend it on, et cetera, et cetera. When we think about kind of a wholesale solution, that's more for kind of capital markets activity. And there, the structural design is one where actually you deposit cash at the central bank and then you tokenize that.
Got it. Okay, let's talk a little bit about M&A. And this is actually something that we talked about the merging of the equity market and crypto markets to some degree, especially in the United States at the moment, and a little bit about the IPO window, but we didn't talk a whole bunch about private M&A and kind of consolidation in general. So I'm just curious, when you look out into the market, maybe putting your more traditional banker hat on here, what are you seeing out there?
I mean, just that, right? I mean, I think you've seen a lot of companies kind of grow over the last 4 or 5 years, probably more latterly with very little access to liquidity. And as the market continues to grow, there's still kind of naturally only space for so many companies. And so you are starting to see that a little bit in the exchange space, but kind of across the ecosystem. Market Data Ventures is another good example. A company we'd invested in, Coinmetrics, got recently kind of acquired. And so I do think, even when we look at the digital asset treasuries, obviously something, the number that's spiked publicly this year has been pretty astonishing. And so, as you start to think on the forward, it wouldn't surprise me if we see some consolidation there as well. So I just think it's a natural evolution of the market as it, becomes a bit more kind of, dare I say, institutionalized. And you probably just have, kind of the merging synergies in costs and things like that. So that's something that we're definitely seeing.
Yeah. There's obviously DATs, as a major sector there. Any other sectors in particular? And, just one observation of mine, just watching the market over the years, is that it seems like there tends to be the sequence of a bubble in funding in various categories, like, custodians and kind of prime brokerage was one over the years, infrastructure more on the crypto side of things. And it takes a little while for that to play out, but consolidation happens after, when the money kind of dries up because returns don't materialize. And so I'm curious, are there any sectors outside of DATs, that feel particularly ripe here, or is it just kind of across the board?
Well, I think a really good example is custodians, actually, because you think there's a lot of digital asset custodians. We've got 2 in our portfolio, fantastic companies. But there you've also seen the emergence of Citi, I think, who spoke earlier this week. BMY, I'm sure, spoke as well. And so you're starting to see a lot of the traditional players also enter the field with large balance sheets, probably more risk appetite and tolerance. And so naturally, you think that there will be consolidation there.
Yep.
I don't necessarily think you need a spark, of a lack of liquidity. I think actually what we've seen, or what I've certainly seen this year, is, companies, kind of well managed, but still the revenue pie probably kind of growing slower in certain sectors, and therefore just makes sense to consolidate, streamline the costs, and have a stronger business.
Yeah, and the last or the first area that you mentioned is the tokenization platform, and I actually maybe would start with the question of, do you think that for the most part, Goldman, are you building your own technology here, or are you leveraging crypto providers? And I saw an article come across the Newswire either today or yesterday that BlackRock has used Securitize as a partner, but now is going to be developing their own technology in-house. And I'm curious because I think a lot of kind of infrastructure plays in crypto are kind of counting on the holders of assets and providers of institutional liquidity to come in and they can act as a partner. And I'm curious to speak to someone kind of sitting on the other side of that equation and think, are you going to be using crypto solutions or potentially building your own?
Yeah, look, I mean, we've been very vocal about this. I mean, we've been working very closely with digital assets. Yep. We're very excited to see, kind of the Canton network and see the momentum that's kind of been driven there. So, we've been users of their software, and that's helped us kind of develop our own digital asset platform. And, as we look to see how the regs evolve and how we see, kind of our future journey, that excites us. This also plays into another theme. When you think about, we've talked a lot about kind of private networks. This ability to actually kind of be active on a public blockchain, albeit where you actually have privacy at the core, I think for us is, naturally a key focus. Yeah. So I think, that's kind of been our modus operandi.
Got it. And I'm sure we heard from some folks from Canton, and shout out, thank you for sponsoring the conference as well, Canton. But I would love, could you just, for folks who might not have heard some of those chats, can you just give a quick overview of what that platform is and why it appeals to Goldman?
Well, there's kind of two components. So, I mean, when we kind of developed the digital asset platform kind of way back, it conceived in 2012 21 early, and then we actually launched it in 2022. One of the things at the time we were very focused on was we wanted to develop a kind of layer 2 platform whereby you had the flexibility to actually settle on different underlying networks. Because at that point in time, it wasn't clear personally whether we would be able to use public blockchains or whether it would have to be kind of a private network, which is kind of where we've operated thus far, just given the regulations. But what we've seen with digital assets, if we've worked very closely as a partner, is them obviously kind of developing the Canton network, and that is a public mainnet. And there's the kind of the whole tokenomics play. They've got the Canton coin, and we really kind of like how that's evolving. And so for us, naturally, as we think about kind of that ability to be active on a public chain once the regulations allow us to do so, for me, that's where we want to be active. And the reason we are obviously, and I've talked about this as well before, one of the reasons we want to divest the platform naturally is, I think having platforms on balance sheet is very hard to scale. It's very hard to get that broad kind of institutional adoption. But whereas if you create something that's more market neutral with key market players who we're working with, I think that gives you the ability to really scale, accelerate adoption, and be interoperable with others who develop on the network as well. And I think that's a key point. So that's kind of the focus for us. And coming back to another point you made, one of the things that excites us about the platform is, we have from primary right through to post-trade. So you have the full life cycle of an asset. And I think when you start to layer in others doing the same, that's very powerful. So you have issuance right through to kind of, trading, distribution, and then post-trade.
And can you talk to me about the importance, last question on this, the importance of privacy in the network here? I have a little bit of a follow-on, but I'm just... why is that so important?
I think the ability to be able to transact and not have the whole network see who you're trading with, I think naturally is how we kind of transact today. And that's something that I think is, kind of a core ingredient across the financial market. It's
super interesting because privacy is one of these topics that has always been maybe used a little bit against crypto in a way, because it's like, why do you need privacy, if you're not doing anything wrong? But it's very interesting to see. Yeah, Blockworks has a couple of different conferences. This is our suits conference, and we have a T-shirts conference. And the T-shirts are the blue-haired developers in Brooklyn. And it's interesting to see this converging, because if you were to talk to that group of people, privacy was maybe an original sin that we didn't get right in crypto. And so to hear you also be converging on that same point just feels very interesting and full circle to me.
And actually, Ethereum obviously have come out recently and said it's key focus of theirs. Yeah, to your point. Yep.
Fascinating. Okay, I'm going to ask a question that's almost so broad that it's not useful, but maybe we can go one layer deeper and provide some nuance. What is the state of institutionalization? And the reason that's so broad is there's so many different ways that you could take that, but maybe across, if we had to rank on a scale of 1 to 10, a lot of these things are topics that we've been talking about for a long time. CBDCs and stable coins, M&A and consolidation, tokenization, and, more private, enterprise-friendly blockchains. If you had to rank those on a scale of 1 to 10, how much progress have we made towards the eventual end goal?
Look, it's a good question, obviously loaded. And I mean, Larry Fink...
It can't be too easy. It can't be too easy.
I mean, Larry Fink actually kind of talked about, tokenization, is coming, is accelerating. And I think that's kind of a nice way to articulate it. We've been talking about it for a long time, and institutional adoption for a long time. But when you actually look now, you've got kind of legal clarity. Certainly for stable coins, we expect that to obviously manifest itself quite quickly, more broadly on the market structure kind of bill. That then will lead itself to kind of that regulatory clarity as they kind of then implement it, the various kind of regulators in the US this is. And the ripple effects of that have already been quite profound. We've even seen that in the UK and how their posture's changed. And you've got this kind of task force now. And so all of this to say is it kind of breeds confidence across the whole market. And you've seen that, kind of with many other kind of sell-side institutions now being very kind of vociferous in terms of what they're focusing on in this space. Their aspirations, be it tokenization, crypto trading, investments. Morgan Stanley this week, obviously, or last week, whatever it was, came out with the stuff they're doing with E-Trade. And so now it just feels so different, because I think the backdrop's just so different, and there's a confidence now to invest, develop, and push forward. So it's difficult to say. I mean, it still feels very early. But at the same time, it feels very different to what it felt a year ago or 5 years ago. And it feels like you've crossed a Rubicon as well, because you've now got legislation which is very different to regulations because they don't get rescinded in the same way if there's a change in administration. So I think, we'll continue to see, and, as we think about next year, I think you'll start to see an acceleration when we look at kind of tokenization. What's kind of the hot topic there at the moment? It's tokenization of public equities. That resonates across the buy side, the sell side in the traditional space because, these products potentially have traded 24/7 in a slightly different regulatory backdrop. That actually, kind of impacts the way the traditional institutions may trade and think about the forward. And so I just think there's a lot of things that will get accelerated. I think we'll see more institutional of crypto trading. We see that already across our own book. But once we can trade the underlier, and once you look at, you look at the CME, you look at ETFs, you look at obviously people trading DATs as well, you're just seeing a very material shift in the kind of players in the market.
And, as we start to wind down here, I would love to maybe focus on what your sort of predictions are, how you see the market evolving over the course of the next year. So, feel free to take that question however you want. We could focus on some of the areas that we've talked about or anything maybe even that we've missed.
Yeah, I kind of feel it'll be a bit of a continuum of what we see, but probably with a bit more kind of acceleration. I think we'll see more activity in terms of tokenization. I think that's, kind of in 12 months' time, I think we'll just see a lot more adoption. I think the kind of stablecoin kind of angle is kind of interesting. So I do think we'll start to see kind of more activity in terms of the use of stablecoins. I mean, we're obviously kind of part of an announcement last week in terms of exploring a GSIB stablecoin with a number of other GSIB banks. We're working with other providers in the space as we explore, the kind of, the right potential for us. I think when you look at the crypto space, I think you'll continue to see that mature. I think we'll see a more broader product suite and just kind of more, greater adoption across the ecosystem. I think when I look at kind of the use of public chains, I've kind of touched on this already, but I do expect as we get more clarity, that ability to be able to be active on a public permission chain, again, kind of with all the right approvals, I think will be very powerful. And that's something I expect to see, probably towards the end of next year, which I think will be very powerful. And then probably lastly, when I start to think about the 24/7 marketplace, that becomes really powerful from a collateral mobility perspective. That ability to be just really kind of proficient with your use of capital liquidity. And the way you'll do that probably will be using tokenized kind of money market funds or stable coins. And again, these are all kind of key focuses across the market in terms of their ability to be allocated for kind of derivative activity, repo, intraday. So it's kind of not a terribly succinct answer. So there's kind of quite a lot there. And then I do think when we look at the kind of M&A and capital market side, I do think, and we were talking to someone earlier today actually, and they said, look, they feel the foundations have been laid, and I think that's a nice way to put it. I think we'll see, continued more activity, more consolidation, and probably more of these entities going to market.
A couple follow-up questions for you there, which is, you talked about tokenization happening across, and we talked about stable coins, which is a form of tokenization, and yep. You're bringing on very liquid assets. So treasuries, US dollar, European currency or currencies, equities, but there's also almost a barbell of, there's also been a push into private credit, where it seems like it's kind of the opposite end of the spectrum, and illiquid, higher yielding stuff. My sense is there are some issuers which are like, hey, you degens like high yields, here, have some yeah,
exactly, here you
stuff.
Go, right?
Yeah, right.
I mean, I guess the way I think about kind of, and we're working on a number of different kind of opportunities kind of in that space, tokenizing funds, and money market funds is one piece of that. But, if you kind of play out, kind of people deciding to hold stable coins perhaps than placing cash on deposit, this is more a philosophical discussion rather than anything else. But then how do you mediate credit to the market? One of the ways you'll do that is probably through investing in tokens. So that will be fund tokens, and then that gets kind of either an infrastructure fund, that could be a private credit fund, could be a mortgage fund. So you can see a way where there's also a different way that the market, kind of receives credit rather than just through banks. And that's possibly kind of something that will happen, a bit quicker in the US than elsewhere.
Awesome. And then maybe a slightly spicy one to end on here, but there's been the Genius Act, which is passed in the United States, and one focus of that has been the ability to pass interest through to holders of USDC, et cetera. Yep. And there's been a little bit of resistance from the incumbents, which are the banks over there. And I'm just curious, from your perspective, I know Goldman isn't a commercial bank, but are stable coins an innovative technology that should strengthen incumbents, or is it disruptive, or a mix of both?
I think a bit of both.
Yeah. Okay, that's easy, not that spicy. Yeah. Okay, well, this has been a ton of fun. If folks want to find out more about the work that you're doing at Goldman, or follow you, or just get in touch in general, what's the best way to do that?
Probably LinkedIn, in fairness. But I know a few faces here, but yes.
Excellent. All right, faces are LinkedIn. This has been a ton of fun, Mathew. Thank you so much for doing this.
Thank you very much indeed. Thank you.
Right,
Thanks, everyone.
Thanks, everyone.